What's going on, everyone? In this video, I want to talk to you guys about how I've been trading supply and demand zones with the NASDAQ futures, with my prop firms, with Top Step, with Top One futures, with Apex, so forth. It doesn't really matter, right? So first, before we even get into how I'm playing the NASDAQ and how I'm marking out these channels, let's just talk a little bit about what supply and demand is, okay? So supply and demand, let's say, for example, we have price action that's kind of chopping up and down, putting in a high, putting in a low, it's back in this range. What I'm going to do is I'm going to take, where are we finding resistance? Okay, I'm going to mark that out. Multiple times where price action has come up, kind of tested, rejected, tested, rejected, tested, rejected, finally broken through, and then tried to make an attempt to hold, and then fallen back in the range. I'm also going to take areas of support, right? Where did price action seem to bounce more than just a couple of times, okay? And where did we finally break through some of these areas and, maybe reclaim? Okay, so the top level is going to be my supply, right? Pretty simple. Again, I'm not going to make this too long, just, for some of the newer people out there. This is my supply. Some people like to call it resistance, right? So we'll just say resistance. And then the bottom, where we are bouncing off of, this is going to be our demand, right? So what we can think about is your demand, just picture buyers, okay? Simple. Make it very, very simple. Where we are finding these touch points, this is where the market is finding buyers that are willing to step in and buy the price of the stock, of the commodity, the asset, whatever it is that you're trading. Supply means sellers, okay? So every time we kind of get up into the top of the range, we seem to find some sellers and the market pushes back down. So what I'm realistically looking to do is, in the middle of the range, I am looking to do nothing, okay? Because when you're in the middle of a channel, you have a higher likelihood that, let's say, for example, you're getting a setup long. You have a higher likelihood that once you get in, you start to think that it's going to break out and then it pulls back on you, right? And then you can come into these losses. Then you think, okay, the market is going back down. So you tend to go short and then the market goes back up. Realistically, what I'm looking to do is I'm looking to find the breakout over supply with a strong, healthy back test to potentially find the opportunity to go long if the market was to hold, okay? So if the market was to hold the top supply, then I want to be long coming out here, okay? Now, if the market fails to hold, meaning we break out of supply and then kind of pull back in and you bust out once more time, but you fail to take out the previous high, and the market rejects that same area of supply, this is a good opportunity to go short, because now you have a definitive risk where you can kind of manage that short position, okay? So does that make sense? So now let's kind of go into our NASDAQ 100 chart here for all of you futures traders and kind of look at exactly what's been going on with our supply and demand. So heading into next week, again, we had a very short trading week here due to Good Friday and Easter on Sunday. So what I am looking for coming into the markets on Monday, okay, is one of two things. I am looking for a continuation to the downside into our next demand zone of 17,970s. And how I'm coming up with that is a previous area of bounce spots over the past week of trading. Okay, so where I would be interested in going short would be through this bottom wick that lost our demand of 18,300. So between 18,300 and 17,971, there's a lot of opportunity for the market to push down and for us to capture a good short position, okay? So since we've broken this demand, we've already weakened this level of 18,305. If we can confirm the lowest price in this formation, which is sitting currently at 18,261, I want to be short. Okay, very simple. So I would be looking for price action to kind of come down in this area, maybe break this area. Let's try once more to get back above, and I want to see a lower high be put in, and then as soon as we take out the bottom of this floor, I want to be short. Okay, now to the top side, I've got supply sitting at 18,500. This was acting as a very, very strong area of resistance. And towards the end of the day in my Evolution Traders mentorship, I was on the phone with one of the members, and literally we called this to a T. We watched price action just sort of grind up from this demand all the way to our supply zone at around 512. We tested it once, we tested it twice, we tested it 3 times. All 3 of those 15-minute candles failed to close over 500. They failed to put in a new high. And as soon as I started to see these inverse hammer candles being printed, I knew that price was going to get weak. And if we were going to get weak, we were going to trade back to where? The middle of the range, okay? Because typically anytime you get rejected at supply, you trade to the middle of the range. Anytime you hold support, you trade back to the middle of the range or top of the range. So I went short here once we had an engulfing candle take out the previous inverse hammer candle with full intentions to ride this down to our support. Now I'm using this little 20 SMA as my midline here. Again, that was sitting right in the middle of this channel of supply and demand. Again, if I go short here, I want to be selling into demand, which was my midline point at my 20 SMA. This is a fantastic way for you guys to trade. It doesn't require you to take a million trades a day. It actually forces patience, especially when you're playing the bigger time frames like a 15-minute chart or a 30-minute chart. Realistically, what you're doing is you're waiting for these channels to get rejected or to hold as support, or you're waiting for these channels to get broken, back tested, and confirm holding of that previous supply to turn it into new demand. This is a fantastic way to trade your evaluations. It's a fantastic way to trade your prop firms. You can make a lot of money taking 1 or 2 trades, right? Imagine if you allowed this price action to come down into support. Once we broke support, okay, and we tried to bounce, and we came back down and tried to flush once more, but failed to take out the low, that could also be your indicator that this is your absolute max pain. As long as we are trading above this channel, you want to be holding long, okay? And you could also target the upper supply. So again, depending on your style of trading, I'm not saying that you would need to held through all of this up and down, but it was entirely possible because 1, you already knew where your supply was. 2, you already knew that you were holding support. To be honest, nothing much to really do unless you're taking profits or you're getting stopped out through that low. Again, if you want to trade with me each and every single day live, you want to get access to my community, access to the lessons that are not on YouTube and some of that live trading, definitely join Evolution Traders. There's a new price point to join for the yearly pass. I've also got an option to join the 30-day boot camp. Also, like, comment, and subscribe if you guys want. Right now, Apex is 80% off evaluations. You can use code DAnthony. That discount code is up in the left-hand portion of this screen. And again, enjoy your weekend, guys. Get outside, get off the screens for a little bit, relax, enjoy some family, enjoy some friends. I'll see all of you guys next week.